Good evening, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday evening webcast. So, just coming off, it's about 8:30 tonight. At 4:30, we did the free webinar on becoming a more consistent trader. I want to thank everybody who came out. It was a really nice turnout, and I hope people got a lot out of it. I sure had fun doing it. The recording is already up on the website and out on social, so if you didn't get a chance to watch that, come check it out. If you didn't get a chance to check out the webcast from this morning, do that, because it all just kind of is it all just kind of flows together. So let's get started. Daily chart, and we just continue to be consolidating in a wide range around a lot of these exponential moving averages. We traded as high as 29.13 in the overnight last night. Bulls didn't do much today. The one thing they did do was they held 28.52 to 28.54 three separate times, tested it, basically turned it into a floor, until the Bears are able to convert that 52 to 54 area, there isn't a whole lot to discuss with regard to getting back to the 9-day at 28.24, the 50-day at 28.07, the roundy weekly pivot at 28.07, and you know it is just 52.54. The Bears continue to allow the Bulls to create these floors underneath the market, and they're going to pay the price as long as that continues to happen. So hourly chart last night, and a really nice sell-off this morning. We were short from 29.10. We got into a couple nice shorts, then a nice long, and a nice short into the close from 74. And then, what you see is 54, 54, 54.75, 52, 54 quarter, 52 to 54. Just draw a great big line there. And that was the deal last night. They did 51 here. So here it is, 28.50. That is your intermediate term bull bear in this tape. Now, if the Bulls want more, they got to deal with this. 29.13. The first thing they need to do is get back above 28.85, which was the high from back here on April the 16th. They need to deal with that. So from 27.17 to 29.13, with the exception of one little move here Thursday into Friday, Bears have really, really laid down. So the delineator has tried to be the hourly mid-band has tried to hold things in. You can see them trying to break above it now. That's the blue line sitting right at 28.76. I'll be interested to see which side of that line we wake up on tomorrow morning. So I was short against that line. My runner got stopped out. We tried it again. We got stopped out even. We canceled the short. And now I'm kind of watching, and I'm wondering if we need to be long against that area. So we'll be evaluating that, because if the plan tonight and the Globex, the middle of the night stuff has moved, it has moved, and if the plan is to walk it up, okay. Now tomorrow we got the FOMC. There's going to be a press conference. I don't think there's nothing else they can do with rates. And look, if all this going up is because they're trying to price in the thought that they're somehow going to go negative rates, look, I didn't stay at a Holiday Inn Express, and I don't read Barron's, and I don't really care. But that seems a little far-fetched for a simple trader like me to see us go negative rates. And if negative rates is what it takes to keep the market up here, then we'll have a very interesting reaction after 2 o'clock. What am I going to be doing right before 2 o'clock to get ready for the Fed? Nothing. I will be flat unless I'm very profitable in the position. Don't game the Fed. I'll give you the same lecture in the morning. Do not take positional trades a couple of minutes before the FOMC because you think you know how the reaction is going to go. It doesn't matter if you are, if you are a Holiday Inn Express frequent flyer, or if you have an economic thesis. It doesn't matter. It does not matter. Wait for the reaction, gauge the reaction, trade off of the reaction. It is a much more risk-responsible way to handle it. Because when people try to game the Fed, just like when they try to game jobs, you come in and say, wow, that's got to go up, right? So you'll put a trade out right before, and it hits. And let's say you're right for you. You'll take it off almost immediately because you know you just stuck your hand in the cookie jar and you got away with it. And so you probably won't get as much out of it as you thought you probably would have. If you're wrong, you're not going to get out of it. You'll probably add to it. And you'll turn it into some swing trade disaster that you never intended. Why? Because the trade was not about making money. The trade was about you wanting to be right about the Fed reaction. And trades that are based upon ideology or what you want to have happen or that make you feel like you're smarter than everybody else, when those trades go bad, they tend to become account crippling events. Do not have an account crippling event tomorrow. Just let them do what they're going to do. Trade the reaction. Sort out the press conference. There will be plenty of handles to be made without trying to catch it before it happens. That's my speech on the Fed. Tune in tomorrow morning. I'll give you the same speech. All right. So look, hourly mid-band's your bull bear. It's going to have to make a decision. 29.13 is the upside of this current ramp, and 28.52 to 54. It's a granite floor until it's not. All right, everybody have a great night. Check out the webcast if you're so inclined. I want to thank all the people that are inquiring about coming and checking out the room. Please do. We would love to have you. Take care. Trade them well. Be safe. Be healthy. I'll talk to you in the morning. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.